Hey, everybody, and welcome back to Letters of Intent. I am Pankaj Raval, the founder of Carbon Law Group, and today I'm joined by my fantastic co-host, Sahil Chaudry. Sahil, how are you?
I'm doing great. And I am, yes, for everyone who doesn't know me, I'm Sahil Chaudry. I'm corporate attorney here at Carbon Law Group. And today we have a special episode of Letters of Intent. Today we're going to be doing some role playing. And yes, you heard that right. This is not an OnlyFans channel. We are going to be doing some legal role playing where I'm going to play lawyer and Pankaj is going to play entrepreneur. And we're going to try to figure out whether he should select an LLC or C-Corp for his new venture.
Yes. I'm going to be putting on the entrepreneur hat. I'm going to be asking a lot of questions that probably you guys have of our listeners out there when you first think about starting a business. So, Sahil, should we jump right into it?
Let's jump right in. So, Pankaj, first of all, what kind of business are we talking about? Let's aim first at industry. Let's take any example that maybe from a client you're working on right now. What's an industry we should explore?
So let's start with maybe healthcare, right? Because an issue that we've dealt with recently. Client comes to us and say, "Hey, I want to set up a sober living practice or sober living company, and I need to figure out how to structure this."
Okay, great. Well, when it comes to anything that has a professional element to it, there's an added element of complexity, which is that usually in a professional corporation, you cannot have someone non-licensed owning a piece of that business. Now, with sober living, we understand there may be exemptions there, but coupled with any kind of professional corporation is usually a management services organization, a company that's intended to distribute profits, that is meant to invoice, that's meant to provide the administrative support to a professional corporation. So, Pankaj, let's try to. What I would suggest is we're going to start with focusing on that organization, and then we can figure out what would be the right entity.
So let me tell you a little bit more about the business and what we kind of do. So the hope is, so I'm a physician, and I'm going to be providing the actual clinical care for a lot of these people going through these withdrawal, going through different elements of becoming sober. However, I'm working with this team of people. There's about four of us, and we want to be able to structure it in such a way that we can grow it and ideally get investors in the future. We really want to make this into a large nationwide organization. We see the benefit of it. We see how we can make a great impact, how we can help a lot of people. I've already proven it out in this last year, but now we need to figure out how do we best structure this for growth and also making it attractive to investors.
So let's start with there are different kinds of businesses. Sometimes people open up a business for cash flow, and sometimes people open a business because they want that big, juicy exit. And so in this case, are you expecting the business to distribute profits to its owners regularly?
So, it's a good question. I think I'd like to get paid for my time. I'd like to make sure I'm being properly compensated. But as far as distributions go, I mean, I have another job. The bills are paid. I'm not looking for massive distributions or profits taken out from this company. I really want to see it grow. I really want to kind of reinvest that money so we can scale this thing into something much, much larger.
So if that's your goal, that weighs in favor of an LLC versus a C Corp. And I'm going to explain why. Because at the end of the year, an LLC is taxed on the profit that is allocated to each of the members of the LLC. Whereas in a C Corp, the entity, you're taxed at the entity level, but then you're only taxed on the dividends that are actually distributed to the owners of the C Corp. So if you aren't expecting to get regular distributions, it's better for you to go with a C Corp because that way you can retain earnings within the company instead of having the cash go out to the owners regularly and deplete the reserves in the business.
Interesting. Okay, so you're saying that it's better not to take money out if I want to grow the business?
Well, yes. I mean, if you want to grow the business and you're preparing for an exit, I would say that it's the C corp ways is a better option because you're not going to be taxed when you keep money within the C corp versus
I don't have to pay any taxes if I keep it in the C corp.
you will have to pay taxes, but the way it works is if you first of all, you're going to have some level of corporate profit. The company itself is going to earn a profit after it applies all of its expenses. And then on that money, you have a choice. Do you want to distribute those remaining profit as dividends after that initial corporate tax? Or do you want to retain the earnings in the corporation, in which case you aren't paying tax on that money because you're not distributing it?
I don't have to pay any tax if it is a corporation On the money I keep in?
You only have to pay tax on the corporate profit once, but then on the money that's retained as earnings, you aren't paying tax on that money. That money you're able to apply towards your future business and future expenses.
Okay, so I wouldn't have to pay it personally as opposed to like an LLC where I have to pay if it kept money in, then I would have to pay personally whatever that distribution would have been. But with a corporation, you're saying that I would just pay like a tax on whatever's retained in the corporation, but then beyond that, there's no tax owed.
Right. There's no tax owed as long as that money isn't distributed as a dividend to the owners. But that brings up a great point, which is what's the difference here? One is a pass-through entity and one is not a pass-through entity. So what's a pass-through entity? An LLC is a pass-through entity, which means that whether or not you actually physically actually take a cash distribution, the profit at the end of the year is allocated to you, which means the IRS is going to tax you on your profit whether or not you take it. And so
That sucks. Okay,
yeah,
that's not fun.
that does suck, and so that's called phantom income, and that's why when you don't have the ideal candidate for an LLC is oftentimes a single member, an owner who is going to be taking a distribution for themselves, but they aren't expecting to have a major exit. They're expecting to pay themselves with cash distributions. You can organize your payments as guaranteed payments in an LLC, but when it comes to the C Corp, you don't have pass through. It's not a pass through entity. So your corporation is paying taxes, which on its surface looks expensive. But in a corporation, you're not planning on distributing the entire amount of money to yourself. So, for example, let's take an LLC where your profit at the end of the year is about $200,000. That might be enough for someone who's a single member to say, well, I actually need all of that money. I'm not keeping that money in the LLC anyway. But now let's say you're a company making millions of dollars and you need to make some major capital investments the following year. It's better to go with a C Corp because you can retain your earnings, you can invest in the things that you're going to need the following year. So that's a big difference between a pass-through entity and an entity that's subject to corporate level taxation.
Interesting, interesting. Are there any downsides for quitting a corporation?
Yeah, there are some downsides. I would say that double taxation is the big one. That's the one that keeps people away from a corporation. Otherwise, it's actually quite flexible. You can create multiple classes of stock. Venture capital funds prefer a C Corp because it's very flexible. You can contract for whatever kinds of classes of stock or shares that you want. You can contract for preferred return. It's also much easier to create an equity incentive pool in a C Corp. You can do that as well in an LLC with profits interest, but it is more complicated.
What do you mean by equity incentive pool? What does that mean?
So let's say you want to incentivize your employees. You're able in a C Corp to separate out a class of stock that allows for your employees to either receive that stock as an award or receive it at a strike price, which is an option. So it allows you, C Corps are provide a very clean structure for you to offer corporate incentives to your employees where they can participate and ride along as the company grows. And usually, because a C Corp is anticipating some kind of financing event, some kind of venture capital event, the employees are incentivized to work hard and align with the company's vision because they get to participate in that upside. So I would say, usually, if you're running a cash flow business, like let's say you've got a small business, you're operating a chain of dry cleaners, a chain of restaurants, you're operating something where cash flow, regular cash flow is involved and you're not expecting a major financing event, that's a great candidate for an LLC. And you're still able to offer incentives. It's just a little more complicated. Now, with a C Corp, that's a great option for something like what you're doing, which is you're going to provide services to a medical corporation. You're going to have a very large staff. You're going to have complicated employment agreements. You're eventually intending for some kind of a venture capital or financing event. That's where corporations are very attractive. And you're going to want to incentivize different investors in different ways with different rates of return. You want that level of flexibility in a C Corp.
Interesting, interesting. Huh. So it sounds like, yeah, in my situation, a C corp makes more sense. Yeah. Okay, that's
Well,
interesting.
let me ask you, are you raising money from family and friends right now? Or are you raising money from venture capital funds, from private equity? Are you taking on debt? What's kind of your financing stack here?
Yeah, so I mean, we need money quickly to keep the operation going. So we have an investor who's going to be investing a little bit of money right now in the company, but then yeah, we're trying to get outside investors in the next probably 6 months too. So we're trying to go out and try to raise quite a bit more money because to expand and to get other locations for this, we need to be raising more money quickly.
Exactly. And so if you do need to raise money and you need to incentivize and offer different types of rates of return or different kinds of voting rights versus economic rights, different kinds of distribution rights, if different people are participating at different levels and there needs to be a waterfall approach, a C Corp is definitely better. Now, how many owners do you expect and how actively involved do you see those owners being?
So I see many, I mean, in terms of owners, probably see two or three people managing the day-to-day operations. I will be coming in as the physician helping actually doing treatments, but I think we have two or three people who have experience in this industry. We're going to be managing the day-to-day.
Yeah, in that case, you want the governance controls that a C Corp offers as well. In a C Corp, you're going to have a president, a secretary, a treasurer, you're going to have a board of directors. You want to allocate the governance rights in a very organized way because otherwise, who pays for what and who gets paid and who's making any kind of decision, especially in an organization like that where there are complex decisions. There might even be a separation between medical decisions versus administrative decisions, business decisions. You want to be clear on who's making what decision. And so, especially because there are, when it comes to medical organizations, there are HIPAA compliance concerns as well. So you want to make sure you're taking into account who's making what decision because there needs to be a very clear chain of responsibility for liability purposes for insurance companies. Insurance companies, financiers want to see very clear sources of authority and very clean communication and approvals with regard to agreements, with regard to financing, with regard to insurance, with regard to any kind of corporate decision that's being made.
That's a good point. What else do you need to know to figure out how we can structure this?
Well, there's one more element here that's beneficial if you go with a C Corp, which is called the qualified small business stock. And so this allows you to exclude, if it's structured properly, up to 100% of capital gains on your sale.
Any business can take advantage of this?
So it's not any business. You have to hold the stock for at least 5 years, and the business must be an active operating business. So that means that at least 80% of the assets that are held by the business, meaning it can't be a holding company. So 80% of the assets must be used in the active business. I also want to tell you about another advantage with a C Corp, which is that you may be eligible for QSBS, the Qualified Small Business Stock Exemption. And this allows you to take up to 100% of your capital gains upon sale. And the requirements are you have to hold onto the stock for more than 5 years. The stock has to be issued by a domestic C corporation and it has to be a qualified trader business. Essentially, the IRS has enumerated a number of businesses that don't qualify. So, for example, professional services, banking, insurance, hospitality, farming. So, the question in this case, it might require a little bit more research, but there is a world where a management services organization qualifies because it's not the one doing the medical work.
Interesting. That's interesting. That sounds actually very attractive. Okay, we'll have to chat more about that and see if this is something that could qualify. This is great. Thank you, Sahil. This is a really interesting analysis. I had no idea about some of these nuances between a LLC and corporation. So thank you.
Well, I love it. You gotta come to Carbon Law Group. We've got the answers. It's what we do all day. Yeah.
Seem great. Like you guys really know what you're talking about, and I look forward to working together.
Yeah, exactly. Me too.
So, all right. Well, you guys, that will be the end of our role play today. So we hope you guys found this helpful. I think it was a lot of really valuable information to consider when you're starting a company. It is a big question between when to start an LLC versus when to start an S-Corp. It's not like a straightforward issue where you can just answer one question and find the answer. There's probably a variety of considerations to make as we discussed today. But this is just kind of the tip of the iceberg as well. It really depends on the business you're starting, why, what your goals are. And, we're here to guide you along that way. We structure many businesses. Every week, people come to us with these questions. So we've got years and years of experience doing it and can guide you along the right path based on what your goals are. So you guys are confident you're making the right decisions going forward. And that's a big difference between, starting a business on your own versus working with a professional. It is an investment, but the question is, do you want to make that investment in your future or not? We do believe that we do provide a strong ROI on that investment, and you're going to be getting compound interest in this business as you grow it. Thank you, Sahil, for walking us through the complexities of starting an LLC versus a corporation and the differences. One type of business entity we didn't talk about, and there's several types of entities we could consider, but the other one is an S Corp, and there's some kind of a hybrid between an LLC and C Corp, but it isn't eligible for QSBS. So if you're looking for that QSBS benefit, you're not going to get that with an S corp.
Pankaj, you just brought up S corps. Why do you like S corps? Who is the client that when they come to you, you say, okay, you need an S corp? What is that ideal client who's eligible for an S corp?
Yeah, so great question. Oftentimes it's a professional service provider in many ways of starting an S corp. That's probably the easiest answer to that. However, smaller companies too, they're not looking to raise money outside capital and also trying to limit their tax exposure because there are real benefits to starting an S corp for tax purposes, especially when compared to an LLC. Because with an S corp, you're paying potentially less in self-employment and other FICA taxes. Because with an LLC, everyone needs to remember that you are not only getting taxed on your income, whatever you make from that LLC, but you're also going to be paying a 15.2% in self-employment taxes. So the main difference is that, with a S corp, you can actually make yourself an employee on the company. You pay all the normal, employment taxes that you would pay any other employee that you hired. But then the benefit is that any other distributions beyond that are not, you don't have to pay the self-employment tax on that. There are some nuances there, but overall, you can really save as you make more money with S corp. And it really makes sense when you start making, 150, 200,000. It doesn't really come to play until you kind of hit that threshold. But once you start making more than that, you can really experience some savings versus an LLC. So that's why I said, professional services for sure. So what's one party that always, should be really thinking about an S corp or an S election. One thing people don't realize too is that actually with an LLC, you can make an S election. You can check the box to say, hey, even though I'm an LLC, I don't want to be taxed as a partnership. I want to be taxed as a S corporation. And you can actually do that. Those are things we can walk you through and help you with. So a lot of these things people don't realize, but there's a lot of ways to kind of look at the taxes, look at how much income you're making and make some projections and actually structure your entity accordingly. Whenever you're discussing entity structuring, you should be having a conversation about legal structure, but also about financial and tax structure, because it's going to make a big difference in how you grow.
So, why would somebody pick an LLC tax as an S corp versus just an LLC tax as a partnership?
Yeah, great question. So in LLC taxes and S corp, really you get the benefits of both. You get the simple structure of an LLC operating agreement, fewer organizational docs, but there's the benefit of being taxed as an S corp, and you get the advantages of paying potentially lower taxes. That's kind of why we do it. However, I will say that it can get complicated because as you grow, if you want to issue equity to other stakeholders, to employees, it's not as easy, even with an LLC tax as an S corp, because they're kind of hybrid structures. There's not a lot of clear guidance because they're not used as much as to how certain grants will be taxed, will be treated. Sometimes even some of the legal documents can get a little bit complicated because are you an S corp or are you an LLC? It matters, and realistically, it can get a little complicated. So if you want to be smaller, if you want to make this kind of a smaller entity, you're not really planning on growing too much, but you just want to make using this to sell, kind of do drop shipping or TikTok, whatever it might be, that probably is okay. But if you want to grow, if there's gonna be more people involved, if you want to start giving out equity, raising money, yeah, I don't recommend any of these kind of more exotic structures because even though they do work, really your corporation is probably the best if you want to grow and raise funds. If you want to be an LLC, I mean, LLCs are oftentimes best for like real estate. Those are really built for real estate and holding hard assets. I wouldn't recommend an S corp or a corporation necessarily for a real estate business, but they're really often used in the real estate context, which makes the most sense. But again, if you're trying to grow it, if you're trying to raise more funds, then you may want to have a corporation as a parent company and LLCs below it. So we can talk about those structures and help people determine what the right structure is for them.
Perfect.
All right. Well, thank you, Sahil. This is great. I hope everyone found this conversation really helpful. If you have questions about structuring your business or find out more, please reach out. This, again, is Carbon Law Group, and you're listening to Letters of Intent. Until next time, please like, follow, share for more.